Current ratio equals current asset, current liabilities. Quick ratio equals current asset inventory, current liabilities. Debt ratio equals total liabilities, total asset. Gross profit margin equals gross profit, sales. Net profit margin equals net profits. Suppose a person invests $40,000 at 12% interest for 20 years. What will he get after 20 years? Formula: future value equals cash flow, 1 plus R caret N minus 1 R. Here cash flow is 40,000, R is 12%, N is 20 years. So the answer is find yourself. Suppose a person borrows 500,000 from ABC Bank at 10% interest compounded annually for 4 years. He wants to pay the loan in installment. What is the amount of installment? Formula: present value equals cash flow, 1 to 1, 1 plus R caret N R. Here present value is 500,000, R is 10%, N is 4. The answer is find yourself. Cost of debt equals K, 1T. K equals before tax cost. T equals tax rate. Cost of preferred stock equals dividend, market price. Cost of common stock equals dividend of next year current share price plus dividend growth rate. CAPM equals risk-free rate plus volatility of stock market interest rate risk-free rate. Weighted average cost of capital equals WD key, 1T plus WP asterisk KP plus was KS plus WN asterisk KN. Suppose a person invests 300,000 in debt, 200,000 in preferred stock, 250,000 in retained earnings, 250,000 in newly issued stock. Key equals 12%, KP equals 10%, Ks equals 9%, Kane equals 13%, T equals 40%. Find his WACC. WD equals 300,000 1 millionths equals 30%. WP equals 200,000 1 millionths equals 20%. Ws equals 250,000 100,000ths equals 25%. Wn equals 250,000 1 millionths equals 25%. WACC equals 30%, 12%, 1 minus 0.4 plus 20% asterisk 10% plus 25% asterisk 9% plus 25% asterisk 13% equals 9.66%. Mr. X invests 120,000 in a bank. Cash inflows are 350,000, 400,000, 500,000, 200,000, 300,000, 400,000 for 6 years. The interest rate is 10%. Find the NPV and IRR. NPV equals net present value. IRR equals internal rate of return. NPV equals 350,000, 1 plus 10% plus 400,000, 1 plus 10% squared plus 500,000, 1 plus 10% cubed plus 200,000, 1 plus 10% caret 4 plus 300,000, 1 plus 10% caret 5 plus 400,000, 1 plus 10% caret 6 minus 120,000, 1 plus 10%. Equals 1573085, 120,000. Equals 373085. NPV is positive, so invest in the project. IRR equals RL plus RHRL asterisk NPVL NPVL NPVH. Need to assume lower discount rate at which NPV should be positive. For example 15%. Need to assume higher discount rate at which NPV should be negative. For example 35%. Now solve it yourself. BB equals coupon, 1 to 1, 1 plus R caret N R plus par value, 1 plus R caret N. R equals interest rate. N equals number of years. YTM equals C plus par value purchasing price N par value plus purchasing price 2. C equals coupon. YTM equals yield to maturity. N equals number of years. YTC equals C plus call price purchasing price N call price plus purchasing price 2. YTC equals yield to call. 1 P equals D per kilosecond. P price of share today. D dividend. K's cost of common stock. 2 P equals D1 K's G. P price of share today. D1 next year dividend. K's cost of common stock. G dividend growth rate. 3 non-constant growth. G1 20%. G2 to 15%. GN 5%. D0 to 2. KS equals 12%. Find price of share today. D1 equals D0, 1 plus G1. 2, 1 plus 0.2. 2.4. D2 equals D1, 1 plus G2. 2.4, 1 plus 0.15. 2.76. D3 equals D2, 1 plus Gn. 2.76, 1 plus 0.05. 2.89. P2 equals D3 Ks G. 2.89, 0.12 minus 0.5. equals 41.29. P equals D1, 1 plus Ks plus D2, 1 plus Ks squared plus P2, 1 plus Ks squared. Equals 37.25. Dividend equals net income equity ratio target capital budget. Payout ratio equals dividend net income. Retention ratio equals retained earnings net income.